Hello traders and welcome to another video review. Today is Wednesday, June 7th, 2023. Let's take a look at the Forex economic calendar today. What do we have here? There are some very important data releases. One of them was actually the GDP data from Australia for the first quarter, and as you can see, the expectations were better than the previous reading, 0.8% versus 0.5%. Nevertheless, still ahead of us is another very important event, Bank of Canada Interest Rate Decision, scheduled for release at 4 p.m. The previous interest rate was 4.5%, and the market participants expect the rate to stay on the very same level of 4.5%. 30 minutes later, crude oil inventories from the US are scheduled for release, and this time the forecast is way below the last reading. As you can see, 4,488,000 was the previous reading. The forecast is 1,152,000 barrels. So situation of the markets right now is very interesting, and I think that we should take a look at the Australia short-term chart, and of course on the US dollar to the Canadian dollar. And let's start with the US dollar to the Canadian dollar because it looks like it's the most important event that is still ahead of us today. For our chart of the US dollar to the Canadian dollar is showing us some sort of the nice downside reversal. If you take a look closely on the situation on the US dollar to the Canadian dollar, you can clearly see that we moved below the short-term moving average, as you can see here, and then the new local low was made around the previous technical support located at 1.3403. so that's the technical support. I will make it green once more because it looks like the market is trying to bounce from this support. Nevertheless, there is the technical support at 1.3334 and one more technical support, the key technical support and the swing low from the May 8th, and this level is at 1.3313. so for now we can clearly see there is some sort of the technical resistance here. 1.3457 is the technical resistance and the zone, the trailing zone upper boundary. The recent low was made apparently, let me put the line on it, was made at 1.3387, and that low was made during the bullish divergence. You can clearly see that there is increasing momentum on the RSI indicator, and the price is making a new low. So that's the clear bullish divergence, which might produce some sort of the bounce towards 1.3457 or even higher towards the other technical resistance level, which is located apparently at 1.3566, but then of course there is 100 periods moving average at 1.3501. So that's the situation on the US dollar to the Canadian dollar. In terms of the interest rate decision, any positive surprise, so the Bank of Canada hikes more than expected. Of course, the spike down will be produced on this market because market participants will likely sell the US dollar and buy the Canadian dollar in that situation. Of course, the other decision, when the interest rate decision is in line with the expectations or there is no hike, then of course we should expect the same price action that was present on this market before, and the bullish divergence should be developed even higher. That's the US dollar to the Canadian dollar. Let's take a look at the Australian dollar to the American dollar. So this is that market. As you remember, yesterday we got a hike from 485 to 510. by the Reserve Bank of Australia. Now the key technical support is seen at 6,461 pips. The other one is of course located as a technical resistance right now at the level of 6,771. So this is the level, and there is of course a technical resistance at 6,678. Very steep movement to the upside. The market is trading above 50 and 100 periods moving average, but it hits the extremely overbought conditions. So this zone might be the reversal zone for the Australian dollar. It's already produced a tweezer top, so in a case of the any kind of a data that will disappoint the market participants, the Australian dollar might turn lower. So where is the support? Where is the support in that situation? Well, 6,641 is the intraday support, of course, and then there is 6,582, the other technical support. As long as we trade above these support levels, the outlook remains bullish. However, it will be very problematic for bulls to break above this supply zone, right? There's two red horizontal lines. Nevertheless, it's still possible, and then of course the target is swing high. So please keep an eye on the situation on the Australian dollar to the American dollar. It looks very, very susceptible for any sort of the unexpected macroeconomic trigger. And last but not least, let's take a look at the crude oil, because as you know, we are having the we will have the crude oil inventories data today. The market participants await this kind of a data release. 75.03 is the technical resistance, and 74.72 is another technical resistance. So to complete this zone of the technical resistances, we need to cover the level of 73.82 that was tested yesterday, 2 days ago as well. Now the market closed the gap, trades just in line of the moving average, waiting, I guess, for the economic data to hit the wires, and then of course the market participants will decide what to do, how to behave with the news released already. So the local technical support is seen at the level of 70.12. The other technical support, a little bit lower, is located at 68.80. The key technical support, of course, in the short term is right now for this market at the level of 67.06. On the other hand, the range limit, the range upper level is located at 72.32. So any breakout of this level to the upside or this level to the downside would likely means that the market is about to make some sort of a movement up or down. So please keep an eye on the current situation on the crude oil market. It looks like the crude oil inventories might be this kind of a economic trigger that will trigger basically the news on the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.